Welcome back. Now let's talk more on the markets as key NSE indicators break new support levels. Bosun has the details there. Over to you now, Bosun. Good morning.
Yeah, good morning, Chimeze. It's good to see you. As you already know, it's raining heavily downtown Lagos, and I'm sure that's at the headquarters as well. It's a whole lot of vehicular traffic jam, and I spent about 3 hours getting down here all over the Third Mainland Bridge. 3 hours on Third Mainland Bridge. That looks like a figure you can use. So today is a very wet day in Lagos. There's going to be a lot of traffic now in the city, and we expect that to be right from this morning to the end of the day. The rain is not giving any sign of abating yet. It's just about past 10 in the morning. We don't know how long it's going to rain. Maybe this rainfall will dampen the investors, will cool down investors' appetite a little bit in terms of sell-off that Temple talked about earlier on the program, which we saw last week. Chimeze, you feeling cozy and warm over there?
It's raining heavily here also, but well, because I'm inside the studio, I'm feeling a little bit warm.
Yes, but straight to the market. It's been a very interesting week we had last week, and Temple touched about that. But of course, if you put last week into perspectives of what we're seeing towards the end of last week, the trade part and of course the geopolitical tension between the US and Turkey, that is the big story that we're asking our friends across the markets this morning. What's going to happen to emerging markets? We already saw that today. Emerging markets was on parking early today. The South African rand fell early in the morning trade against the US dollar, but we started recovering about an hour ago, trying to monitor all of that while in vehicular traffic. But again, if you look at the Turkish market, and that's an emerging market, whether that will impact frontier markets is a question I started putting out on Twitter this morning to folks around the world to give us a sense of where frontier markets such as Nigeria will be today, tomorrow, when we begin to see the sinking of the Turkish currency, the lira, and of course the knock-on effect of that on the economy, the Turkish economy, and whether there will be this what you call the Turkish contagion, whether it will spread beyond South Africa and affect other frontier markets such as Nigeria, Ghana, Kenya, and the rest of them. That's the big story this morning. We are part of the global village. If you look back on Friday again, perhaps you get a sense of where we were coming from last week in terms of our own equities. If you look at Dangote Cement that suffered the most on Friday, this was Nigeria's most capitalized company, 25% or so of the total equity cap here. And of course, you find that this company is highly exposed to foreign investors. You remember, since last year, you've seen steady sale of shares of Dangote Cement to foreign investors in the Middle East and elsewhere. So when those folks are knocked, they look for the big names. Look at Friday again. You find Dangote Sugar, Dangote Flour, and the big banks taking a hard knock. And that tells you that investors around the world are considering Nigeria as a major place where they pull back some of their profit when they see some of the storm or heavy weather coming down on the emerging markets, in particular if it comes in all the way from the United States, which is still the world's largest economy, with the currency still the how you holding the highest percentage of a reserve around the world, about 62-63%. The rest of the world currencies like the Swiss franc, the EU, the European Union or the euro, and the Chinese yuan holding the balance of that. So the dollar is still the currency to beat. But right now, that is the story. The dollar is gaining. The euro lost some footing early today, and now we're back onto this very first trading day of the week. But if you take the story a little bit further, if you look at home, we find inflation will be a top story here for this week, as well as the debt auctions by the debt office and, of course, the treasury auctions by the central bank. We'll find a bit of a repayment of a very small amount of Naira paper maturing also this week. So a bit of a balance in between inflows and outflows this week. What will that mean for the equities market is anyone's guess as we start another trading day. Chimeze, back to you.
Well, you talked about key NSE indicators breaking new support levels. What support levels are we likely to see this week?
Well, you notice for about 2 weeks we were holding around 36,000, and the market was finding it very difficult to break that level either to the north or to the south. So that support level was what was broken on Friday when the index fell below the 36,000. That gives you another support level. We're looking for another resistance level. We don't have it yet. Investors are not so keen, as it were, a bit of apathetic on the local political side. They are also concerned about inflation and interest rate outlook for Nigeria. You already know that the window is closed, as it were, on MPC to have a rate cut in 2018. It was predicted we will have 2 interest rate cuts before the end of the year and a hike in the first quarter of next year. Now it looks like we've lost those 2 opportunities to hike or to cut rate, essentially because first the MPC, new MPC was late in coming because the National Assembly did not approve those new members of the MPC early on time. By the time they get into office and they get to sit down, time was already gone. Then you find a very heavy hitting from the fiscal side in terms of heavy borrowings and spending. And of course you have the problem, the delay with the budget. And of course, the global space also now crowded the central bank, and the room for rate cuts in 2018 looked like a foregone conclusion. So what are we left with? You found a signal in the July 24 MPC that we're likely going to see a hike in rates perhaps before December. So investors are waiting on that. So they're pricing that into fixed income, treasury bills, and bonds, papers that are getting floated. And that's why Temple talked about the rates last week. It was bearish on both the Naira bond and the treasury bills at the FMDQ, and also here at the Nigerian Stock Exchange. So you find that all this come together will tell you that, look, the equities markets find a new support level, but of course you also see a gentle rise in yields on fixed income assets, again because investors' concerns are getting a little bit higher, a bit of a nudging higher on the political front, if you want to ask me. But of course the geopolitical issues are affecting emerging markets, and of course knocking us a little bit also at the frontier window here.
Well, I had asked Temple that it would appear as though markets is experiencing a lot of sellouts now, but then there are some investors that are really picking up those dumped stocks. And I was trying to understand what different things are they seeing, these investors that are picking up these stocks that are being dumped.
Well, what we saw is a bit of a sell-off, but we didn't see much aggressive volume, if you ask me. Not much of an aggressive volume like several hundreds of millions that runs into billions. No, investors were just selling down a little bit, taking profit, booking profit. Again, when things begin to happen at the global currency space, investors begin to look for where do they make some harvest of what they think stocks that have performed in their portfolio, whether they're hedge fund managers or whatever, or PEs guys or whatever. Then they pull up that a little bit of back, put it in their kitty, because Nigerian stocks are still relatively cheap. So who is picking them up? There are those who look at the market. When the markets go, see, this is the simple market 101. Buy low, sell high. So if you look at Dangote cement at whatever price you think it was, and you think you've made some money, Dangote flour mills, EcoBank International, or any other of such big stocks like Zenith or GT Bank or UBA, then you say, look, I'm going to book a bit of profit at this level. I can wait for 5 days, 3 days from now. Then I'm going to look at the portfolio again and decide what to do with that particular asset. So there's always a willing buyer and a willing seller. If Dangote cement, if some folks are selling down, some folks are willing to pick it up. And that's how the market works, really. But again, with this rout that we've had last week, almost 3% decline on the composite index, you find small stocks making some gains. And that's where some folks who are very savvy about investing in equities will be looking at for this week and last week as well. You find some small insurance stocks. You find a few what you call the penny stocks in the healthcare sector, in the agriculture sector, that investors will be interested in. And if you look at the board all over again, you find these stocks made some gentle gains last week. They stay under the radar. Oftentimes we talk about the big boys, but the small caps are also there, and this provides some entry points for you if you are interested in playing the equities playbook.
All right, let's talk a little bit about earnings. We have seen some of the big banks post their earnings, but Access Bank is yet to deliver its own report. What are the traders hoping to see from this bank?
Well, I'm not too sure I got that very clearly, but I think you thought about earnings there. Earnings last week was a top story, but again, the sentiment was largely negative. So investors decided not to go gaga over any earnings, as it were, emerging. GT Bank numbers hit the market, and you didn't see a very big rally. Zenith Bank about a week ago, over a week ago now, earnings as well. Outlook on UBA for this week. Notori was disappointing last week. First 9 months report to the market after listing just about 2 weeks ago, reporting more than about 8 billion in loss after tax. Investors, traders were utterly disappointed in Notori PLC, but there's a time for redemption. That was listed by introduction. No new shares were sold. So all you need to do is to say, look, let me wait for the next 3 months, get a full year, and get a full picture of what this company is doing and what it is all about. So don't expect any significant move on Notori shares until the full year report is here. 9 months was disappointing. I'm not sure anyone will be getting overboard to say, let's price this particular stock higher, unless, mark my words, unless the company hit the market with some big company news that will move the stock to the upside. Everybody's going to be digested in 9 months. Look very closely in the books and see what 12 months will tell them as far as that company was concerned. In the banking sector, Access and UBA is still holding everyone out, and we're trying to find out what the numbers will be. But if the earnings from GT and Zenith Bank was any indicator, that tells you that the earnings will come to the market and you're not going to see any major rally unless we have a major story or news that rallies the market before those earnings come and they could just ride the bandwagon. Unless that happens, earnings is going to play a part in this week's trading, but not a major play, as it were. Our folks will focus more on inflation. What is it telling us? And of course, the fixed income market, the treasuries, and the debt auction.
Right. Are we likely to see the inflation figure that will be released? That will be Wednesday this week, perhaps push the market button?
Yes, if inflation comes in a little bit, inflation has very little impact on the market, but it will help asset managers and fund managers to take a second look at their numbers, as it were. They need to look at them, the stocks, the sectors they are weighing in as well. For the annuities, the pension funds, the insurance guys, they will look at the macro story behind inflation, the various sectors, and use that as a basis for saying, look, we're going to move more, lean a little bit towards this sector or that sector on the market. So it's going to be, look at inflation, but look at the macro story behind them. Then you decide what you do for the rest of the week. Chimeze, back to you.
And of course, we're expecting the DMO auction and CBN's Treasury bill auction. What is being expected from the marketplace?
Well, from all indicators, investors will look more at the fixed income this week. If I can still make, if yields are trading higher, if the yield curve is turning north, for me, it's a good time to make money on fixed income. And I'd rather sit down on my equities for now and hold on and see what rate, when the DMO reopen those papers, they put them on the market, I'll look at what rate I can make in the market. Right now, if I can beat inflation and I can beat interest rate outlook from the central bank or MPC, then I'm home and dry, Chimeze. That will be my playbook.
All right, thank you very much for your time, Wilson. We'll take a break now, and when we come back, we will look at the impact of foreign aid on economic development. To stay with us.